Most beginner traders make one big mistake. And the big mistake they make is rushing into learning complicated concepts like liquidity and indicators, and they tend to forget the basics. One of the basics they tend to leave out is market structure. And so the issue is you have a lot of beginners trying to learn all these fair value gaps, liquidity, change of characters, and they leave out the basics. Because truth be told, you cannot learn liquidity if you have not learned what market structure is. It's just the truth, right? This is the core basic. This is foundation. So if you don't have the foundation, you can't move to the advanced levels. And so today, the first foundation we're talking about is market structure. So you might be wondering, what is market structure? Well, simply, market structure is the direction the market is moving in. We also call this trends, the trend, the market trend. So when you say, what is the trend of the market? We're just asking, where is it going? Is it going up? Is it going down? That's what we're trying to find out. And so without market structure, right, you can't go further in your analysis. When you go into your trading journey, right, you realize that as you start doing more analysis, you realize that you can't get deeper into analysis as long as you have not understood or if you don't know how to find market structure. This is the very first thing you look for. All the big traders, the very first thing you look for when you open the charts is the market trend. Is it up or is it down? So it's very important to understand this. So like I said, market structure basically is we're trying to find out if the market is going up or down, right? And so we start off with the basic, the directions. So in market structure, we basically have three trends. We only have three trends, not four, not five, not six. No, we only have three, right? So here's the three. So first one is uptrend. Second one is downtrend. Last one is sideways, right? Or consolidation. That's what it's called, right? So these three are the directions we have in trading: uptrend, downtrend, sideways. There's no such thing as the market is going rainbow style or the market is going river flow style. Like there's nothing like that in trading. It's only uptrend, downtrend, sideways. If you see any funny movements, just know those are memes or meme coins, but you never find that stuff on gold, right? So these are the three: uptrend, downtrend, sideways. Those are the directions. So I think today we'll just talk lightly about an uptrend and a downtrend. I think in another video I'll go into more depth, but yeah, let's just get into it. So first one, uptrend. So when we say uptrend, what we're basically saying is the price of whatever we're trading is going up. That's what we mean. That's an uptrend. So the price of what we're trading is gold, I don't know, Euro USD. We're saying the price is pushing up, right? And, or in other words, buyers are in control. That's what it means. And how do you identify an uptrend? It's pretty simple. So this is not an uptrend, guys. If you ever see a straight line like this, it's not an uptrend. It's just price went up, but this is not a trend, right? So when you're looking for an uptrend, you want to look for this. You want to see this. This is the formation you look for, right? Almost like a staircase type of thing. This is what you look for. So here it's called a higher high, and then this is called a higher low. So you look for higher highs and higher lows. That's how it goes. So an uptrend is go like this: higher low, higher high, higher low, higher high, higher low, higher high. That's what it is. And like I said, it looks like a staircase going up. So this is pretty basic, pretty easy to understand. It's not so complicated. Yeah. Now on to downtrend. Downtrend is now very similar. It's almost like basically the same thing, but now it's just opposite. So with downtrend, it looks like this, right? Like again, it looks like a staircase going to the downside. Now instead of higher highs and higher lows, we have lower highs and then we have lower lows. So that's how you find the downtrend. You look for lower lows and lower highs. So like again, it's not just this. If you ever see a straight line just going down, that's not really a downtrend. That's just price going down. So you want to look for this sort of thing. You want to look for these points: lower high, lower low, Same thing with an uptrend. That's what you want to look for, right? So, like I said, these are the basics. It's not so complicated. This is not too hard to understand or too hard to memorize. But yeah, so that's it. Market structure. I'll get into deeper parts of these later on, like uptrend and downtrend and sideways. I'll definitely get into more depth later. But as for now, that's what you guys need to understand. So, I hope you guys understood. That was lesson one. Catch you in the next video.